and how did you meet your co-founders?
Sure. Well, it's going to be challenging to talk right after Facebook. We started YEEPAY around the same time, at the end of 2003. And I met my other co-founder, who is our current CEO, at a tech conference in Hawaii. At the time, we were both members of the Silicon Valley Wireless Technology Association. And you know, Hawaii is actually the best place for, not only the best place for tech conferences, but also the best place for honeymoon. So we instantly had chemistry, and we figured out that we wanted to do something together. That's why we always believe that, you know, tech conferences like CHINICT could be very helpful. You know, this is the place that you can meet your co-founders, your investors. And the reason that we decided to do payment was, at the time, if you look at the Chinese market, the payment infrastructure was actually quite lagging behind. It was probably one of the biggest unmet demands in the market. So we saw there was a huge market gap that really needed to be filled. Because most people actually still depended on cash and also other legacy payment systems like postal and bank wire transfer. Even for a lot of the e-commerce companies, they still heavily depended on cash on delivery, right? So the whole e-payment infrastructure was missing. So we figured out that's probably one of the biggest thing that we could do.
Mm-hmm. So you and your co-founder had been in the US for several years before coming back to China. What was the biggest challenge for you coming back to start a company, especially in the financial services sector, which is now highly regulated and was tricky back then as well?
Right. Before I joined YEEPAY, I actually had worked at Oracle for 7 years in the US. Then I felt the 7-year itch and decided to leave the big corporate life once and for all and to do something more exciting. And as I said, we figured out that payment is probably one of the biggest opportunities because it actually provided infrastructure for e-commerce and also a lot of the traditional businesses as well. But after we started the company, we figured out it's actually not the easiest task to do as a startup. First of all, you know, payment is really a mission-critical application because it's not just like running like an online gaming website or a digital content website, because we're actually dealing with money. We're actually counting other people's money. It's not even our own money. So it's highly sensitive. It's really a precision business. And this market also needs to be regulated, right? And people are paranoid about security and reliability. So definitely there's, I mean, this is actually a business of a very high entry barrier. The second thing is that if you look at the payment market, it's not a single technology product solution. It's really more about a value chain and ecosystem, because we have to deal with the banks. We also have to work with the merchants, as well as the consumers and the government regulators. And in some cases, we also have to work with the telecom carriers. Basically, we have to work with all these different factors in the system. If one of them actually doesn't work, the whole system will collapse. And thirdly, I think the challenge is that we really need to keep a very delicate balance between the mindset of the internet and the mindset of the financial services. And if you look at the payment, we're really kind of sandwiched between these two opposing extremes. On one hand, if you look at the internet, right, basically the mentality is always about innovation, about creativeness. It's about openness, right? So it's very risk-taking. And on the other hand, if you look at the financial services business, if you look at the banking system, it's relatively more conservative, right? It's always about risk management and security. So as a payment company, we always have to combine these two different mentalities.
Mm-hmm. So there are a number of large players in the market right now, including Alipay, ChinaPay. China Telecoms are trying to get into the business. So how do you differentiate yourself from these competitors, and do you work with any of them?
Yeah, I think we have really 3 major differentiators. First of all, we really see ourselves as a vertical payment service provider. And if you look at the big guys like Alipay or Tenpay or like China UnionPay, they really see payment as a generic service, right? They don't really differentiate much across different verticals and different sectors. But in our case, we see that there are fundamental differences between the requirements across different verticals. So we actually can provide customized solutions for all these different verticals and different sectors. For example, we can cover online retail, e-commerce, but we can also do like digital content, telecom, airlines, and travel. So essentially, we can provide a package solutions for all these different vertical industries and make it industry-specific application. And the second thing is that we can also provide value-added services on top of the core payment functionality, because we see payment not only as a tool to collect money, but also as a marketing tool, as a financial services tool. For example, one thing that we've experimented before is really to work with the social media websites. Then we can provide really an online marketing platform for our merchants. So their users can really, for example, using Weibo to retweet their purchases to increase the conversion rate, right? Basically to attract other users. The other thing we do on the financial services side is really we can provide this product that offers short-term financing for our merchants, so we can effectively relieve their cash flow stress and increase their transaction volume. And the third thing is that we don't really see payment as a single point technology. We actually always try to focus on providing a total solution for our merchants, which means not only we can do online payments, we can also do offline payments, including call center telephone-based payments, as well as mobile payments, and we even do offline point-of-sale payments. Because a lot of our customers are actually big corporates. For example, like when we work with an airline, in most cases, not only they require online payments for their website, but they also require a payment solution for their call center, because a lot of their users actually book the reservation through their call center. So those people are not going to use online payments, right? So you need to have a very effective payment solution over the phone. They also have their sales office across the nation, so we can provide them with point-of-sales terminals to process their offline credit card payments. And not only we support bank cards, we can also support prepaid cards. So for example, a lot of the online gaming operators, their user base is relatively young, so a lot of those people do not even have a bank account, but they can use those prepaid cards to pay for online games. So basically, these are the three major differentiators, right? Vertical solution, value-added services, and all-in-one total solution. And I think there's also another big difference between us and Alipay and Tenpay. And if you look at Alipay, most of their customers are individual sellers on Taobao, right? But if you look at our customers, we try to target those big corporates, those enterprise businesses. So in our case, trust is less of an issue, so we don't need to do escrow. The other thing is that we are a completely independent third-party payment solution provider, so we can maintain this neutrality. We don't really have any potential conflict of interest with our merchants. But if you look at Alipay, basically it's a part of the Taobao and Alibaba group. And Taobao itself is selling products over their website, so in some cases they might be conflicting with their merchant customers.
Yeah, 360 Buy dropped Alipay, right?
Exactly, for that very reason, because Taobao and Tmall is actually directly competing with 360 Buy.
Mm-hmm. So there's been a lot of talk recently about mobile payments, and Jumio was just mentioned, there's Square, there's a lot of Square clones in China. How do you guys see the mobile payments market in China, and what specific area of mobile payments are you most focused on at YEEPAY?
Yeah, mobile payment is definitely one of the hottest trends in the market today, and everyone is talking about mobile applications. But I think when it comes to payment, mobile payment is actually a very loose term. It's a very broad term. It could mean a lot of different things to different people. And I think the easiest way to categorize mobile payment is really to use a very simple formula. And basically, you can look at like what kind of thing we turn the mobile phone into, right? So based on this formula, there are basically three different types of mobile payments. The first type of mobile payment is really what we call an NFC payment. And essentially, you turn a mobile phone into a credit card, right? And NFC payment is mostly used in the retail scenario when you have a face-to-face transactions. And this kind of payment is mostly championed by China UnionPay and the big telecom carriers. It actually has some regional pilot programs, but they have very limited success. And the second type of payment, mobile payment, is really when we turn the mobile phone into an internet terminal. So essentially, it's an extension of the internet terminal onto your mobile phone. And a very good example is just to look at your iPhone. When you're purchasing, downloading apps from the iPhone App Store, and you're making this remote transactions, and you're making this remote payment, right? And also when you pay for downloading the music or movie clips, right? So this is kind of the payment that third-party payment service providers like us are focusing on. But still, in this camp, there are two different categories. And if you look at guys like Taobao or Alipay, they focus more on the tangible goods. And if you look at providers like YEEPAY, we try to focus more on providing the payment for digital contents. So basically, we have a working partnership with more than 80% of mobile gaming operators. And the third type of mobile payment is really the Square copycats, because a lot of people are talking about Square. And if you look at Square, essentially you're turning your mobile phone into a POS terminal, a point-of-sale terminal, right? And this type of payment is mostly used for SME. It's actually not used for the consumers, but for the merchants, right? The problem with Square is that in China, it still faces a lot of the regulatory challenges, and as well as some of the security issues. So I don't think it's going to take off very soon. It's probably going to have a big market after 3 or 5 years. But within the near future, because of the regulatory issues and security problems, it will have very limited success. Because people's attention are always drawn to the device. But if you look at Square, it's not only about the device, it's actually about the network behind it.
Speaking of regulation, so in late 2010, the government started requiring third-party licenses for payment providers. So how, in your mind, how has this impacted the industry? Do you think they're going to see a lot of smaller players dropping off because they don't have licenses, or what kind of changes will this have?
Yeah, it's a very good question. Tomorrow actually marks the 1-year anniversary of the issuing of the first batch of licenses by the People's Bank of China. And this time last year, we were among the first payment service providers to obtain the license.
Was that kind of a relief when you...
Yeah, it was a very exciting moment. It's like a major milestone in our market. And our license number is actually 007. And I think the whole regulation and licensing is going to accelerate the consolidation of the market. A lot of the smaller players are probably going to be, they're probably going to be merged by bigger players, or they're going to be, retreating from the market. And the other impact is that if you look at the companies like us, before the license, we were more like an internet company. But after the license, we were more like a financial services company, right? Because there are more restrictions on how we can do our business. And as I mentioned before, payment is really a mission-critical service. It's a precision system, right? So it makes a lot of sense to be regulated, because we're actually dealing with a lot of money, and it's not even our own money. And so I think in the long term, this is actually a very positive trend. But there's also some challenge for the regulator, because they need to keep a very subtle balance. If there's too much regulation, basically it's going to suppress innovation, and if there's not enough regulation, it's not going to manage the risk.
So I have a final question. There's a lot of entrepreneurs here today, and this is kind of a two-part question. One is just general advice that you would have to offer to entrepreneurs, but more specifically, sort of as a B2B business, one of the toughest parts of your day, I would imagine, is actually going out and pitching people, selling people on this idea, and sort of acquiring large customers. But when you guys were just starting out, how did you actually sell your first customer? How did you acquire that first person?
Well, the advice I can give to the entrepreneurs is that it takes a lot of patience to build a real company. We started about 7-8 years ago, right? So it really takes a lot of persistence, right? Because especially for something like payment, right? Because it's not something so sexy or flashy, right? It takes a lot of time to build up the scale. Essentially, we're a scale business. And when we first started to talk to the customers, it's really a chicken and egg problem, right? A lot of customers wouldn't work with us if we didn't have a relationship with the banks. At the same time, the banks would not partner with us if we didn't have enough customers, right? So it always took a lot of challenges to build a company. But I think the future is still bright, because if you look at the payment market over the past 5 years, it had a phenomenal growth, right? The average growth rate has been over 100% for the past 5 years. So we're still in the very early stage of this market. And if you look at the internet, I mean, there are a lot of fads kind of just come and go, right? If you look at the whole group buying thing, or if you look at the online gaming thing, right? So all these different trends kind of come and go, but payment is forever. because payment is really the foundation, the infrastructure for a lot of the other businesses. Right? It doesn't matter what kind of things you're going to sell. It doesn't matter if you're selling a game or an airline ticket or like a telecom solution or a tangible product. As long as you have transaction, you need to have payment. You need to have payment at some point, right? So payment really provides a universal service. So we're really, we're really excited to see that our work not only affect ourselves, but we can also impact the whole ecosystem of the internet.
Great. Well, I think that's all the time we have, but thank you so much.
Thank you so much.